China, if the premium was the same, the $100 premium, their actual spot price is 1965, 115 over our 1850. Then you add the premium. So maybe they're 2065. They're over $100 an ounce more than we are in the West. And that signals how important gold is, or just how much they don't believe in the Western price of gold and silver, and they think it's a scam. And this is their way, I think, of siphoning all of the world's gold and silver to the highest bidder. And then they'll let the price run, and the Western system will just be obsolete.
The Chinese yuan has lost nearly 6% of its value against the US dollar this year, while Shanghai-listed stocks are off about 8% from their 2023 high, set back in May. Gold prices in China have soared as a result, hitting a historic relative high with a more than $100 premium per ounce over metal prices in New York or London, according to Bloomberg. Data showing a 40% hike in withdrawals from the Shanghai Gold Exchange and a 15% increase in imports in August underscore this trend. The gold market may be struggling to attract attention from Western investors. However, Eastern consumers continue to pile into the precious metal at record paces. According to Andy Schectman, China's willingness to pay a considerably higher premium for gold and silver demonstrates their lack of faith in Western pricing mechanisms. It suggests they are attempting to accumulate large quantities of these metals. Renowned analyst John Reade, chief market strategist at the World Gold Council, said that a perfect storm is brewing in China's gold market as the government appears to be curbing imports as demand remains reasonably elevated. Andy sees that the People's Bank of China has steadily increased its gold holdings. China added to its gold reserves for an 11th straight month in September when a surge in local gold premiums drew market attention. According to official data released Saturday, bullion held by the People's Bank of China rose by 840,000 troy ounces in September. Regarding the price of silver, Andy emphasizes the undervaluation of this precious metal and its various applications, including monetary, industrial, and military uses. Even the U.S. government has projected that all known mineable silver supplies may be exhausted by 2030. This assessment, coupled with increasing demand and a lack of exploration, points to silver's potential as an undervalued and depleting asset, making it a significant investment opportunity. We will now share clips from Andy Schectman's with Robert Kiyosaki. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for further updates. Thank you and enjoy the video.
The spot price. Spot price is, if it's $1,820 an ounce in the United States, it's $1,935 in China. That's how much more they're willing to pay. And I believe this will be a trend we will see continue for both gold and silver, where the big traders will arbitrage and all the gold and silver will flow east to the BRICS nations. And first, it's important to note that the People's Bank of China purchased another 840,000 ounces of gold in August, which was increasing its holdings for the 11th straight month. And as we opened up Monday trading, gold in China jumped to its second highest premium on record against the international benchmark. And it opened up at $112 more. That's just the spot price. So a typical silver coin right now will cost you $25 an ounce, give or take, depending upon what you're buying. And you know, it's vastly undervalued. Now, they haven't really messed with the silver price in China the way they have the gold price. At least I'm not seeing reports of it. Nonetheless, it is being siphoned off of all of the world's exchanges at a rapid pace. The big industrial sized bars are disappearing really rapidly, which is indicative of big money taking possession off of the world's exchanges. So unique is it has several different uses for it. I mean, like you mentioned, in terms of its, well, let's start with monetary. It's been money for 5,000 years, and it's really experienced a monetary renaissance over the last 3 years or so as people have awoken to the value found in silver, an asset that is depleting in nature, yet is priced half of its 1980 peak. Okay, I agree with that. Then we have green and digital aspirations where you need silver for solar panels. You need silver for electric vehicles and battery operated vehicles. You need silver for just about anything that conducts electricity, just about anything that is electronic. But one area that a lot of people kind of gloss by and maybe is the greatest demand for silver is military. there's nearly 500 ounces of silver in every Tomahawk cruise missile. And watch the awful news that you see here with what's going on in Israel, and you see hundreds and hundreds and hundreds and hundreds and hundreds of these missiles going up in the air. Any of these sophisticated missiles with guidance systems have copious amounts of silver in them. And so what's different about silver and gold specifically is not only is silver used in industrial and military applications, but when it's done, usually it's to the point where either it's used in such small quantities it doesn't make sense to recycle, or in the case of military applications, it blows up. So all of the silver used in industry, the majority of it is not recycled, it's gone forever. So it's getting more and more and more scarce. And we can see that in the geological numbers that really show silver is decreasing in nature at a rapid pace, so much so that the US government came out just a few weeks ago and said that they believe by 2030 that all of the known mineable supplies will be exhausted. Now, they haven't, to be fair, done much in exploration over the last several years because it's so cheap. Silver's so cheap, it's not affordable to go and explore. But it's also important to note that silver is found in nature, like your skin is epidermis. Silver is found in nature in a form called epithermal, very near the surface. So the big deposits have been found a long time ago. It might be the best investment, most undervalued asset on the planet, or the investment of a generation, as it continues to be depleted and more uses continue to pop up every day.
In 2023, several BRICS countries have cut ties with the U.S. Treasury by selling off $122.7 billion in U.S. Treasury bonds. China, a leading BRICS member, reduced its U.S. government debt holdings by $117.4 billion, marking a decline from $835.4 billion to $821.8 billion between June and July. This trend signals a significant move away from the U.S. dollar as the world's dominant reserve currency. According to Andy, the root cause of this shift lies in the unsustainable printing of money by the United States, coupled with rising interest rates. This continuous money creation is straining the entire financial system, and there's a fear that it might lead to a major systemic crisis. He emphasizes that it's not just ordinary traders reacting to these changes. Central banks have steadily increased their gold reserves over the last 18 months. In August, central banks globally acquired 77 tons of gold, making it the third consecutive month of net purchases, totaling 219 tons over the 3 months. This suggests they are preparing for a potential major shift in the global financial landscape. Let's get back to the interview.
Just in this year alone, the BRICS countries have offloaded $123 billion in U.S. treasuries. China and Brazil and India, the United Arab Emirates, all of our supposed allies of the past, well, minus China, although we had a good relationship with them for a long time, they're dumping the bonds. And there are countries that are working very hard to strike deals with one another outside the dollar. And as we continue to print at a pace that is unsustainable, while rates are going higher, we are putting such strain on the entire system. The whole system's going to be dragged down, and maybe that's what they're intending to do. But maybe that's why, and it's not just the wealthiest traders in the world, that being the central banks, it's the most sophisticated and well-informed, continue to buy gold at a pace that the world has never seen over the last 18 months, more than they have ever seen. And every month, it's bigger than the last. They know what's coming. And this is a very big deal, and it must be done methodically, not too quick to cut off your nose to spite your face. But there will come a point, and I call it logarithmic decay. Little by little by little by little by little, then bang, all at once. It's like going over the falls. Well, we're seeing the little by little by little by little by little. Every interview that you and I have done, we've talked more about the little by little by little by little by little. Where are we in this logarithmic decay where we hit the falls? Don't know, but we will hit that. And I think that's what you're so good at showing people, is the little by little by little by little. And when the all at once comes, when none of us know, when it probably on a Sunday night, if you're not prepared, not just with gold and silver, in every way, I think it's going to be a very, let's call it a religious experience, and one that I don't think will be very pleasant for the majority of the people who don't see what's coming and therefore have not and cannot get out of the way.
What happens then?
Well, I think in order to get to the CBDC, you have to create an event. And that event could be the loss of the petrodollar and everyone dumping dollars, which creates hyperinflation. As the dollars hit our shores and inflation goes straight up and interest rates go straight up to compensate, not controlled by the Fed, but by the market, and everything collapses. But have no fear. Lael Brainerd and her central bank digital currency, the #2 economic advisor to the U.S. White House, modern monetary theorist who ran point on Fed Now and also worked with MIT in establishing the CBDC. I think you will create an event where people will beg for it because they will have watched the banking system implode. CBDCs will be the end of privacy and will be the ability for the Federal Reserve to create both monetary and fiscal policy right to the end user. And it's what they want, and it is coming. And the Bank of International Settlement said every country must have an operational one by 2025. It's coming. And I think that's another thing to be prepared for. Get out of the matrix. Own things that have no counterparty risk, like gold and silver. There'll come a time where they'll say, you got 90 days to turn this in. And if you don't, it's worthless. And now you get your new CBDC. When does that happen? Don't know. How does it happen? I don't know. But they will have an event that makes people want to take it. Because the majority of the people that I talk to and listen to you, they don't want to take it unless they have no choice. And that event, the banking system blowing up, everything blowing up, here, will make you whole. Just sign on the dotted line.
Continued high gold prices in China and rising withdrawals and imports signal ongoing demand for precious metals in the East. This demand is driven by skepticism surrounding Western pricing methods, foreshadowing a future trend. How will the rising demand for gold and silver and shifts in the global financial system impact the investment landscape for these precious metals? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.